Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomat. Today we're going to talk to you about 5 stocks that are showing values right now. These are my 5 favorite stocks in the market today.
Smash that subscribe button. Give us a nice thumbs up for the channel. Takes 2 seconds. Click it. Let's roll. 5 stocks that Bert's buying, 5 stocks that he likes, all are showing great delivery right now with undervaluation here. The question is, which one is Bert specifically buying right now? Maybe it's one, maybe it's two, maybe it's all five. And what stocks are you guys buying out of these 5 stocks? We're going to rip it through those Dividend Diplomat stock screener metrics. The price to earnings less than the S&P 500, that dividend payout ratio less than 60%. Third, history of growing dividends. We will look at the dividend yield. We will take a look at the 5-year average PE. Let's take a look. Let's rip it. We'll start it off with a dividend gosh damn king.
Let's go. Archer Daniels Midland, ticker symbol ADM. Been down 9% in 2025 so far, down 26% over the last 52 weeks, but they've been up 37% over the last 5 years. So Archer Daniel Midland, not terrible in a 5-year run, but they have been mired by scandal. They're getting crushed by tariffs and the potential impacts of tariffs right now.
And healthcare. Oh man, the corn.
Yeah. Yeah, it's a perfect storm to have them drop, but it's also a perfect storm to create a buying opportunity for those long-term dividend investors. Man, you want to rip through Archer Daniel Midland's metrics here quickly?
Absolutely. $46.10. Wow, guys. If they get in that 45 territory, oh, salivation occurs, guys. $4.20
Easy
for
there, killer.
11 price to earnings ratio, guys. And then we'll get into that dividend payout ratio, paying $2.04. They did just nudge that dividend a little bit by about a penny here. 49% dividend payout ratio. Growth is their middle name because they are a dividend king, well over 50 years now, growing that dividend for Archer Daniels. Now they've kicked it this year, 7.35% on average. It was a 10% banger last year. Obviously, it's very understandable why it's only a 2%, this year. And that yield now has swelled up because they are down 26% since last year, down 8.75% so far this year, based on other news releases. Again, Bert just mentioned them all those macro events plus micro events at the company. Again, 22 billion market cap, guys. This is looking right now.
Yeah, they're below their 5-year average PE of 11.89. So they got one PE ratio below 1x, whatever you want to call it. Where's their current buy price? I'm saying their value. Is it now? Is it never? Is it close? I'll tell you, yeah, ADM is already there for me. I think I've grabbed a share or two right around this price already. I'm going to keep nibbling with ADM. Quite frankly, I'm going to look to see if there are any other positions in that 4% plus yield range that I'm looking to get out of that I can consolidate and fold right up into this dividend king.
Ooh,
So
little Kraft Heinz maybe which they've come back down, unfortunately.
I know, but when they come back up, Lanny, when they come back up, Kraft Heinz, you're on the chopping block.
You're on the choppy block. All right, that's Archer Daniels. Bert likes them right now. He says, I am ready. I bought at this price. But let's get into the second stock, guys. We've got 5 total to cover. Bert, what's that second dividend aristocrat stock?
Yeah, we're not going to spend too much time on this one because we talked about it in yesterday's video. T Rowe price, ticker symbol T Rowe, the large asset manager that has no debt. That is that dividend aristocrat, down 18% year to date. Let's hit them through their metrics here. At the price of $92.83, that PE is 10.5, payouts 58%. They're a dividend aristocrat with 38 years of increasing dividends, that 9.43% 5-year growth rate, and that yield is almost at 5.5%. It is the juiciest yield for T Rowe price.
And getting paid to wait.
Yes, you are.
And are they a merger target? I know that's always the discussion we talk here, guys. Let us know if you think T Rowe price should just get gobbled up for 25 billion or something like that.
Yeah, that would be swell, although it'd be hard to replace that dividend income. What's that price for me right now? Am I buying? Sure, it's already in that buy zone. It's like the conclusion we reached yesterday for them about T Rowe price. 92.83. Their price to earnings of 10.5 is below their 5-year average of 14x. So they're currently showing signs of value. So this might be a good time for us to keep nibbling and keep adding to our position by 1 or 2 shares at a time.
You guys a BlackRock investor, or are you guys
Yeah.
buying T Rowe or Ben?
Ooh.
Let us know in those comments, guys. But that's the second stock. Man, Bert Hall, you got to start this one off because I know you've been buying this hand over fist, sometimes every day in a week, sometimes every other day, definitely every single week. Your position is getting massive out here in the dividend investing community. You're definitely changing the game, flipping the script with buying this high tech, high dollar, high cash flow stock.
High market cap stock too, because their market
Oh,
cap's over
oh,
2 trillion with a T. If you follow our X feed, you know I've been loving Alphabet, ticker symbol GOOGL, the parent company for
oh
Google,
yeah,
for YouTube, where you are watching
Google.
this video here. The
Google
as that,
stock, man.
yeah, it just keeps getting beaten down right now.
It's
They're
so
down.
volatile. It's like it'll come back up to the mid 160s and then it'll come back down. It's like
Yeah.
what are they figuring out here?
I don't know, but I can tell you this: they're down 13% year to date. They're only up 9% over the last 52 weeks now, and they're only up
Wow.
195% over the
Oh,
last.
only. Yeah.
Yeah, only. But hey, this has created a great buying opportunity for Google. Their price to earnings ratio is 18.26. That payout ratio is 8%. They don't really have much of a history of increasing
Can they
dividends.
afford to pay the dividend with a payout ratio of just 9%?
Yes, yes,
Yes.
they can, and that yield is 0.49%. Overall, though, how much of a value are they? This is what everybody points to, Lanny. Their PE ratio is 18.26. That 5 year average is 26x. So they are trading at a multiple that
Well,
is significantly
definitely a
above that
discount against
5 year
themselves.
average. Yeah, so that's the key piece. Not just the market.
What does everybody know out there that we don't know? Why is this stock so hated right now?
I mean, hey, if they're fighting with the DOJ, I know that's the big one there. They're fighting the DOJ. They're fighting with the European regulators. Are they too big of a company? Whether or not they are or not, split them up. That's fine. Split YouTube up. YouTube will be a fantastic company on its own. So I
Yeah,
feel good about that.
yeah,
We haven't even talked
who
about their
uses YouTube?
yeah. We haven't even talked about their cloud business. There's also Google Cloud too. So there's so much to like about Google and Alphabet that hey, I'm going to keep
We haven't even
scooping
talked
them.
about their Gmail services yet. I'm
Exactly.
just kidding.
Yeah, exactly. So hey, they're already in the buy zone for me. Clearly, I'm going to keep scooping them up. They're clearly a value for me today.
Guys, that was Google. Let us know if you've been buying Google stock hand over fist. But Bert's coming in pretty hot and wild with this four stock. We're
Ooh.
talking Qualcomm, ticker symbol QCOM. Again, another tech hardware play here with Qualcomm. We're talking this stock is now down since last year by about 6%, up about 2% this year, lagging Google because they're only up 135% in 5 years. But let's get through the metrics here, guys. Trading at 156.82. Oh man, EPS projections about $11 to $12, almost $12, so a 13 PE ratio. Payout ratio is so darn safe for this company, similar to Google at only 29% based on $3.40 of an annual dividend. 5 year growth rate is well over 6% at about 6.5. 21 years of growing dividends, climbing their way just a few short years away from that dividend aristocrat status. Again, 174 billion in market cap. Historical PE ratio is about 18 and a half. So being about 5 whole points less than that definitely says undervaluation. Bert, do you own shares of Qualcomm already?
I do. This is one of the tech sector stocks that I have a pretty sizable position in. I built this up several years ago. Pulling up my sheet now, but it's also worth noting while I'm doing this, Qualcomm just announced a 5% dividend increase too. So it was a nice little modest.
Yeah, you'll take it.
Yeah, we'll take
You'll
it.
give it the golf clap.
Yeah. I have 39 shares of Qualcomm, Lanny. So I loaded up a little bit here.
So
Position
Bert's gonna buy 61 shares. He says let's close the gap to 100.
yeah, is it possible to build it up another 10 shares to 50 as I consolidate the chip position? So I sell my Intel, move it into Qualcomm.
You'll definitely add some forward income when you do that.
Well, yeah, if I could do anything and add some forward income, I could sell
Yeah,
Intel and buy treasuries and add
yeah. Put it in a
forward income.
checking account that pays 0.0001%.
Yeah, that's right. So, hey, where am I going to say buying them? I'll say 150 or less. Qualcomm
Oh,
becomes
so you're about there. You're getting there.
not very far off
Couple
to add
percent
to the
off.
position. Yeah, a lot of great companies here. So before we get to that last one here, everybody, the first four: Archer, Daniels, Midland, ADM, T. Rowe Price, TROW.
ADM, it
Alphabet.
always sounds like a brand of music because of EDM or whatever.
Yeah. Google ticker symbol GOOGL and Qualcomm ticker symbol QCOM. We are pivoting hard here for dividend
We are
stock number
pivoting
five.
hard. We're getting into the real estate industry, the monthly dividend income pair themselves, everybody's favorite. Oh, 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 it's magic. You know, Burr, what is this fifth dividend stock?
Realty income ticker symbol O. Love that monthly dividend payer. They've had quite the year. They keep going up, they keep going down, they keep going up, they keep going down. Depends on what
And they are
market.
back at the $55.80 mark.
Yeah, they are. They were up to
Man,
$58
low can
this year.
buy a bucket.
I know. But hey, below $55, I always love realty income. So
You
it's
know,
not
I
really
haven't
far.
gone into the details too much on it. Is it because of what's happening with Walgreens with a bunch of closures? Is it with the high interest rates that are still higher for longer? What is it?
It's a little bit of each. I mean, they're exposed, but the beauty of realty income is they're not any exposed to any one tenant more than 2 or 3%. So sure, there's some trouble in Walgreens. Walgreens will close some stores, but we've seen in past earnings releases, it's not
The
the
stock
realty
that
income
just
one.
dominoes.
Yeah. But hey, they have fitness. They're not exposed to any one sector too. They have grocery stores, movie theaters, single tenant, yeah, your Walgreens, your drugstores. There's not one sector that can take down realty income, and not every sector is getting hit right now either. So that's why. But of course, to your point, nobody can catch a break with interest rates right now. Interest rates, the higher interest rates are when interest rates swing up, REITs drop down. Then 2 weeks later, when interest rates come down, Lanny, REITs shoot up. So it's a really tough sector that's just riding the interest rate wave today.
Yeah. So, again, I think they're still projecting about 2 rate cuts this year, and we'll have to see what the
Yeah.
trickle effect actually is on those borrowing costs. You would anticipate lower borrowing costs, which again helps REITs because they usually leverage their butts off to buy more property, or refinance current debt to increase cash flow, guys. So,
Yes.
let's get through the metrics because we got to get through this one, right? I mean,
Yeah.
55, 80, 443 is the AFFO. We're looking at an AFFO ratio of about 12.6, currently paying $3.22 in annual dividends spread over the monthly, 73%, extremely safe. They could keep raising that dividend, which they freaking do every gosh damn quarter, right, B?
Yeah, that's absolutely right. Their 5 year growth rate is 3.57%. They've increased it for 27 years. They're an aristocrat. They've increased every single quarter since they've been publicly traded back in the 90s.
Oof.
That yield is swelling up as that price comes down. That yields 5.77% here for realty income. So,
Ooh, sweet.
not the cheapest value. They're right below their 5 year PE ratio of 12.92. So, the lowest of the discounts on this list. But realty income, down. I like them at the $54
100%
range.
gain.
So, like if it drops below $54, you'll see me nibbling on realty income once again.
And Bert,
Still
where do you hold your realty income stock?
Roth. So it's all tax free. So I love having my realty income position in that Roth IRA.
Just producing income tax free for Bert, reinvesting like a mother effer because you got shares out the ASS guys. So those are the 5 stocks: ADM Archer Daniels, TROW T Rowe Price, Alphabet / Google GOOGL, Qualcomm QCOM, Realty Income O. Out of these 5 stocks, what are you buying? Which one have you been buying? And what else are you buying here in the stock market?
If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us. Jack.
That was Bert, the Hurt Man, and Lanny from the Dividend Gosh Damn Diplomats. Over and out.